What's up, everybody? Zach is back with another episode of Journey to a Million, to $1 million. I'm back from my mini vacation, and I'm excited to get back and start trading again in these awesome times that we have. And it seems like every time I go on a vacation or go have some sort of important life event, it seems like the markets always crash. And I guess you cannot say it really crashes, but they're not doing so well. And now I'm coming back to this, but hey, it is what it is. Go ahead and smash that like button. Subscribe to my YouTube. Got the Twitter where we're doing the live trading. It's starting to pick back up now. But then again, maybe everything is just going to go down, and not going to do as much trading as we would like to when the markets were going at least in a clear direction. I feel like might be a lot of sideways and choppiness coming up. And you know what? And that's what today I would like to go over to review our strategy for times like this, when everything is pulling back. Even though we haven't pulled back that much in the triple Q, where the Nasdaq 100 is only a little bit away from the 50-day moving average on the day chart. So it's not like it's pulled back all that much, but at least it is a little bit. But hey, it was a rough start for the week, and we've got Yellen indicating that we might need to raise interest rates early, even though Powell and the Federal Reserve has reiterated so many times that we will not be raising interest rates until at least 2023. But hey, I guess everybody is entitled to their own opinions. I don't know. But Yellen says that we might. So, I mean, this has obviously sent the markets into some sort of panic mode, mini panic mode, I guess you could say. But anyway, so as you can see, the triple Q is just a smidge above the 50-day moving average, and I expect it'll pull back and probably bounce off the 50-day, which is this purple line. Now, if it does, then it could be an interesting buying point for some calls, but I would like to see some forward momentum, some upward momentum before I get into any calls. Now, and also keep in mind, we're only 5 days from all-time high. So it's not any reason to panic here. Of course, we will pull back a little bit. But of course, again, it has been pretty choppy for the past couple of weeks, and finally sold off. After the earnings week, even though earnings was really, earnings were all really good actually for big tech. But all of that must have been priced in, and yeah, coupled with the Yellen comments, and her rhetoric on that interview that she did, I think it was 2 days ago now. So yeah, I mean, the markets there's just some serious FUD going on. Fear, uncertainty, and doubt. There is serious FUD in the markets right now, and it's causing a little dip, but nothing to be too concerned. My Soxel is doing the worst. That one is just so volatile. It's actually, I'm starting to think it's really good to swing trade this one. It's always up and down some crazy amounts. Actually, we can take a look at that. Would be interesting to see. So even though we were up a little bit yesterday, it was only 1.7%. We're down a little bit in the after hours. We'll see how tomorrow looks, but it's not like we are down at the 180-day moving average again. But as you can see, this is some serious swinging around here, including here. It didn't hold that trend, didn't hold the 50-day. I mean, and the earnings weren't all that bad. I mean, of course, we're in the semiconductor shortage, so a lot of those companies are not doing specifically super well. But nevertheless, there is high demands in the chips and everything. They are very expensive now. So, of course, always keep that in mind when playing around with the leveraged ETFs, especially Soxel. It's very volatile. But anyways, pretty much my plan for times like this is, again, it's the short-term positions. I will be cutting most of my short-term positions. I will take this money, I will dollar cost average into my longer term positions with the high conviction. Now, this is if we are pulling back more. If we go through this week, if we're on the 50-day moving average for the triple Q, if Soxel starts indicating to me that it's going to go further towards the 180-day moving average, and of course yesterday was a green day. It was a little bit of a green day for Soxel. So we'll see. So I wouldn't say sell everything yet. Of course, don't sell everything, but some of the short-term options that we have been doing. And if you have any of them still open, then it might be the time to consider either A, cutting them, taking the money that they're still worth, and putting them into your high conviction longer term plays, or B, roll the options out. If they're midterm, long-term leaps, whatever. Consider rolling them out. And this is going to be officially the second large-ish dip that my older leaps have gone into, which they're not leaps anymore. Earliest ones are expiring this December, so I only have 7 months left. It's not a short period of time, but yeah, I will start considering, depending on how low they go this time. I dollar cost average to the last dip, and I'm not worried about it, but I would like some extra time on some of those leaps, especially the ARC G ones. So we will see if I end up rolling those out. I don't want to dollar cost average them. I would like to use the capital that I would be dollar cost averaging them into something else, possibly some other commons, different ETFs or something like that. But pretty much like that. That would be my strategy, which is no different than usual. But in summation, I would say, guys, tread very carefully in your short-term positions, especially options. Sideways markets are very painful for short-term options or long-term options. Any option sideways is bad. You're going to lose money. So very, very careful. Even if we're not down, even if we're sideways, that's okay for common stock. It's not okay for options. I'm going to start considering rolling my options out. We'll see how bad the end of this week is. I don't expect it to be horrible, but again, I don't necessarily expect it to go well unless there's some sort of positive catalyst to push back the NASDAQ and S&P. And then lastly, to cut the short positions, DCA into the high conviction plays, and hold your common stock that you have high conviction for. Even though some days it's hard, you want to sell, you're like, oh no, it's gone down so much. I lost so much money in unrealized profit and losses, and I need to sell it. I just feel like I want to sell it. Just have some patience. Patience is the key here. And as long as it's your high conviction plays, now not necessarily a 3 week to expiration on Ford or something like that, which we do have. Actually, I think it's June as of yesterday. But that's not necessarily my highest conviction play. Then again, it's not a very expensive position, so you might just keep it anyways. But pretty much like that. Let me know in the comments or on Twitter, email, anything if you have questions about this strategy through the choppiness times, through the rough times. Haven't officially activated Titanic in iceberg mode yet. Only OGs should understand that. But nevertheless, that's pretty much the plan. So for this week, my swing trades, let me make sure I'm sharing this screen. Yes, I am. My swing trades for this week is going pretty well. I mean, I had a Bitcoin one from last week actually that carried over, up 14% on it, which is pretty good. Bitcoin is 57,000 now. ETH is even higher, 3,500. But I was trading mostly in Bitcoin, so it's okay though. GEVO is down a little bit. I might dollar cost average into more of those during this dip because this is common stock. It's not options, so I'm not so worried about it. And GEVO is the renewable clean energy one. And I think that it has a high probability of success. But of course, it's going to take some patience. Everything is getting hit. 2 days ago, everything was red. It was hard to find something green. Dow, S&P, and NASDAQ, and Russell. And also my coin swing trade is doing okay. I'm up about 2% on that one. I also rolled out one of my coin options. I rolled it out from 1 more week till expiration. I gave myself 2 additional weeks, and it's the same cost. I sold it. I think I took a loss on it, but it was worth $500 something at the time that I sold it. I think $530, and then I gave myself a little bit extra time and a little bit extra strike, which is good and bad, but for a little bit cheaper. So I ended up getting a couple extra ones actually, but I did roll the one that I had. So that's going to be my new position on coin, short-term position at least. And then one I opened yesterday was a Ford one, which I've been wanting to get into. This is a 6-4, $12 call at 32 cents. I think it was 35 cents when I saw it, and I put a limit order for 32, and it actually triggered my limit order, and it jumped back up to 35 cents. So I'm technically up a little more than 9% on this one so far. Closed out at about 9%. So it's going well. I mean, actually, it's not so bad. The GEVO one is not very good, but this one is going to take some patience. This is a growth innovation, tech is all getting smashed during times like this year. But nevertheless, I want to get into a Nike 521 $135 call at $1.25. So I changed this a little bit to make it a little bit shorter in the expiration date, so it will be a little bit cheaper. So it's just less risk, I guess you could say. Don't put so much money into that position anymore because it's pretty choppy right now, and I might not end up getting into it in the first place because of my it's kind of going against my strategy a little bit. But of course, we're going to see how the next 2 sessions go for the remainder of this week. Could be good. Could be crappy. Don't know. But I do think Nike is pretty undervalued since that whole Xinjiang cotton thing. But you guys probably know that. I don't want to sound like a broken record. Another one that is interesting is Nvidia. We can take a look at the graph really quick. But yeah, Nvidia actually got smashed during the February-March transition into cyclicals. Made a wonderful run for it, and now it is currently bouncing off of the 50-day moving average. And for that reason, I would like to purchase one of these. These are a little bit expensive, but so is Nvidia. $600 call. It's about what? More than a month out. It's pretty expensive, $1,800 for it. So go small on this one. I mean, if you get one contract, if your account allows you, your account balance allows you to, I think it could be pretty interesting. I do see Nvidia making a run for it sooner or later. But of course, in options, later is not good. But tread a little bit careful on that one. I would say keep it small. Also can consider a vertical spread, which I probably would do a vertical spread on this one. To be fair, for any of you guys that caught my webinar, my seminar, we actually went over vertical spreads last weekend. And actually the last webinar, whatever you call it, class, stock option class, is going to be this Sunday, actually, at 9 a.m. EST. So hopefully you guys are tuned in for that exciting stuff. And anyways, the vertical spread, I think maybe like a 595 to 620, something like that. We could try. Would be a lot cheaper. Switch over to vertical spread here. Let's see, do a 595 right here. We want to buy that. Of course, the width needs to change. We want to do a 595, I don't know, maybe a 620 or something like this. So we would see how much it costs. Oh, this is a put. We want to do a call. With 20 buy and sell it, yep, would be something like this. I'm not sure what the limit price is going for as of right now. This is weird as acting up. I think I messed it up. But something like that, okay. So we'll have to wait until the market's open to see what those are going for. Sometimes Webull is like that. They need to refresh when the market's open. But nevertheless, it would be a lot cheaper than $1,800. I guarantee you probably around $1,900 to $1,100, $1,200, I just guess. Anyways, guys, I appreciate you tuning in as always. Just kidding, we need to do the QQQ. Last but not least is the QQQ 517 325 put at 350. So obviously, I'm feeling like unless there is a positive catalyst coming up on Thursday or Friday, I don't really see any reason for us to push up. I mean, this is clearly what's going on right now is some jitters from the Yellen comments, and also some taking profits on some of these tech, still transitioning into economy reopening plays, which was in this dip. But of course, we will see how it's going. I'm not so concerned, but I do think we'll probably bounce more off of the 50-day moving average. So some puts could be useful right now, and $3.50 is not very expensive. So anyways, guys, thanks for tuning in. I appreciate you guys as always. Stay tuned for more. Follow me on Twitter for the live trading. We will be doing that when the market's open. Every day, usually, at least I'll update you if it's too choppy and I don't feel like getting into some positions. I mean, Obviously not going to force anything because this is my real monies. I don't want to waste money for no reason. But anyways, also to smash the like on YouTube, subscribe, and let me know if you guys attended the webinar. Let me know how that is. If you guys learned anything in the comments or on Twitter, shout me out on Twitter or something. Let me know if you liked it, and if you want me to do another one, either the same level or maybe a higher level of experience and whatnot. But anyways, guys, if you're wondering what account I trade on, it is Webull. Link in the description. Webull link in the description. If you don't already have an account there, use my link. It'll help me out a little bit to support the channel. But I would really appreciate that. And you'll get 2 free stocks anyways. So guys, see you on the other side. Peace.